Hello everybody, session 50 in mergers and acquisition. In session 50, we are going to see one more problem on mergers and acquisition in the nature of purchase. So let us go directly to the problem. So the problem is the balance sheet of A Limited and B Limited as on 31st 3 2019 is given. The balance sheet of A company and B company is given. The share capital is given, reserves is given for both companies, and long-term borrowings is given 60,000 and 30,000 as you see in the screen, and other current liabilities is also given 4,20,000 and 1,90,000 respectively, and the total of liability side is 20 lakhs, and B is 15 lakhs. So the assets are also given here. The assets, fixed assets is also given. Fixed assets, that is tangible assets is 9 lakh for A Limited, and B Limited is 6 lakh 50, and the non-current investments is also given, that is 1 lakh 50 and 50,000 for B. The total of A Limited is 20 lakhs and 15 lakh for the asset side. Next, the notes to the balance sheet is also given. So we'll see the notes to the balance sheet. That is share capital is share of rupees 10 each, 8 lakh and 3 lakhs, the total 11 lakh. This preference shares is 3 lakh and equity shares is 8 lakh for A company. B company is 7 lakh 50, 2 lakh. Altogether is 9 lakh 50,000. Reserves in surplus. Here we do have general reserve, investment allowance reserve, export profit reserve, and statement of P&L. So total they have given, which is taken from the balance sheet. So long-term borrowings, that is in detail they have given. Long-term borrowings, 10% debentures of 100 each, 60,000 and 30,000. So the other information is given here. A Limited absorbs B Limited with the following items. That means A company is going to take over B Limited. So A company is a transfer company, B company is a transferor company. So 10% debentures of B company are to be discharged by A Limited. Debentures of B company has to be discharged by A Limited by issuing same number of 15% debentures of rupees 100 each. They have to pay that means A company has to provide their debentures, 15% debentures of rupees 100 each to B company. That point A is point. Next, coming to the B point, that is 12% preference shares of B Limited are to be discharged by A Limited by issuing equivalent number of 15% preference shares of rupees 100 each. Even the preference shares of B company are to be discharged by providing the A company issuing equivalent number of 15% preference shares of 100 rupees each at rupees 150 each. The next is A Limited shall issue 4 equity shares of 10 each at 15 rupees each for every 5 shares in B Limited. So A company is going to provide 4 shares for 5 shares held in B Limited, and the amount is 15 rupees each. The next point is the investment allowance reserves and export profit reserves are to be maintained for 2 more years. Then A Limited shall pay the cost of absorption of rupees 10,000. That is, the transferee company is going to pay the cost of absorption 10,000 rupees. Pass the journal entries in the books of B Limited and opening entries in the books of A Limited. So they have asked to pass the journal entries. So let us solve. Firstly, we need to calculate the purchase consideration. So purchase consideration in relating to preference shares and equity shares. So 15% preference shares of that is 150 rupees each. So preference shares is 2,000. 2,000 into 150 is 3 lakh rupees. So in equity shares, we have they said that 5 shares held with B Limited, 4 shares are provided by A Limited. So for 75,000 shares held in B Limited, how much shares has to be issued by A Limited? That is 75 into 4 by 5 is 60,000 shares. The value is 15 rupees each. So 60,000 into 15 rupees each shares value. Total amount is 9 lakhs. So purchase consideration 3 plus 9 is 12 lakhs rupees. So next we will pass the journal entries in the books of B Limited. So B Limited journal entries in the books of transferor company. So we firstly will transfer the realization, all the assets and liabilities to the realization account. Realization account debtor to fixed assets account 6 lakh 50, to investment account 50,000, to current assets account 8 lakh. So being assets transfer to realization account. Then we do transfer the liabilities to the realization account. So 10% debentures 30,000. Current liabilities 1,90,000 to realization account 2,20,000. That means the amount is taken from the balance sheet given. That is B company balance sheet. Next is entry to be passed is the purchase consideration. Purchase consideration due. So A company limited account debtor 12 lakh to realization account 12 lakh. That is the purchase consideration due to A company limited. Total preference shares as well as equity shares. Altogether it is 3 plus 9, it is 12 lakh. Next, realization account debtor to preference shareholders account, being premium on preference shares debited to realization account 1 lakh 1 lakh. Then for realization loss debited to equity shareholders. So we need to balance the realization account. So there is a loss arising in realization account which is transferred to equity shareholders account. So equity shareholders account debtor to realization account 1 lakh 80 1 lakh 80,000. Then 15% preference shares account debtor 3 lakh, equity shares account debtor 9 lakh, to A company limited account 12 lakh, being purchase consideration received. Then next is being preference shares capital transferred to preference shareholders account, 12% preference share capital account debtor 2 lakh, to preference share account 2 lakh, being preference share capital transferred to preference shareholders account. Then being 15% shares issued to the preference shareholders. So for issuing the shares, preference shares to the B limited by A limited, preference shareholders account debtor 3 lakh to 15% preference shares 3 lakh. Next is to transfer of the equity shares, equity share capital reserves and surplus credited to shareholders, equity shareholders account, equity share capital account debtor 7 lakh 50, investment allowance reserve account 20,000, export profit reserve account 30,000, general reserve is 2 lakh 60, P&L is 20,000. So here to equity shareholders account 10 lakh 80,000, being equity share capital reserves and surplus credited to equity shareholders account. Then for being equity shares issued to the equity shareholders, equity share account shareholders account debtor 9 lakh to equity shares 9 lakh. So these are the entries to be passed in the books of transferor company. Next is opening entries in the books of A limited, that is transferring company, amalgamation in the nature of purchaser it is. So first one is for being purchase consideration due. Purchase business for purchasing the business 12 lakhs by paying purchase consideration 12 lakh. The entry has to be passed. Business purchase account debtor 12 lakh to liquidator of B limited 12 lakh. Second entry to be passed here is fixed for incorporating all assets and liabilities, reserves and surplus, and the different transfer to the general reserve. So here fixed assets account debtor 6 lakh 50, investment account debtor 50,000, current assets account debtor 8 lakh, to investment allowance reserve 20,000, to export profit reserve 30,000 we are taking from the B limited as well as A limited. Then P&L account 20,000, debentures 30,000, to purchase consideration is 12 lakh, debentures is 1 lakh 90,000, and so on. So the difference amount is transferred to general reserve, that is 10,000. Next is for entry for purchase consideration paid. We are paying equity shares and preference shares. So liquidator of B company account debtor 12 lakhs, to equity shares capital 3 lakh, to preference share capital 12 lakhs. It is sorry 2 lakh, and to securities, that is premium amount we are going to pay, that is to security premium account that is 30,000 shares into 20 plus 2,000 plus 5, that means equity shares premium and equity share premium and preference shares premium is altogether 7 lakh. So it is 12 lakhs. Next entry is for transfer for making the payment to debenture holders. So 10% debentures account debtor 30,000 to 15% debenture 30,000, being 15% debenture is issued to the shareholder, the debenture holders. The last general entry, that is cost of liquidation paid by the transferee company, that is A company is going to incur the expenses of the B company. General reserve account at 10,000 to bank account 10,000. So from general reserve we are going to pay the liquidation expenses of B Limited. So these are the journal entries to be passed in the books of the transferring company A company. So all these were the different types of problems solved in mergers and acquisition. Uh, that is, you can solve the problems on only purchase consideration. You have to solve the problems on preparation of journal entries, preparation of ledger accounts, preparation of amalgamated balance sheet in the books in the form of merger and the form of purchase. So two types of problems are there. Very few entries are changed in the nature of purchase, but all the entries in the books of transfer are same. Transferring company, it is going to change. Uh, so hence you should be thorough with all the journal entries to be which is to be passed in the books of transferor company and transferring company, and ledger accounts what to be prepared in the books of transferor company. So and amalgamated balance sheet. Thank you one and all.